Hey, thanks for clicking on this video. This is the top 10 tips I have for buyers out there in this market. And I'm telling you right now, this market is red hot. So if you're a buyer, whether you're a first time buyer, a seasoned buyer, or a been around buyer, these tips might help you in terms of getting the house you want and making sure you're prepared. So we want to make sure that every step of the way, you're ahead of the game, because that makes you, when a house comes on the market, in this market, you have to act fast. You have to be and have the best offer to get accepted. Sometimes the best offer has a bunch of different parts to it, so you need to know those parts ahead of time so that when you make this offer with your agent, you guys are ahead of the other people that are out there. So number one, my first tip for buyers out there is make sure you have a good job history, right? So 1.5 years job history is the minimum. Obviously, the more years you have, the better your history, the easier it's going to be to get a pre-approval, right? You want to make sure you get a good pre-approval, and part of that is going to be based on how many years have you been in your business, okay? Number two, down payment. Make sure it's in the bank. Don't have that mattress money in there. Listen, there's a thing called seasoned money. The money has to be in the bank for more than 90 days. Part of the Patriot Act, if you put money in the bank during the deal, the Patriot Act's going to kick in. They're going to want to know where that money come from. Where's this money coming from? Did it come from Colombia? Is it under your mattress? Like, what are you doing to make this money? So you have to make sure those problems don't come arise, because it could kill the deal. And if the deal dies and it's your fault, you could be responsible to lose some of that deposit. So you don't want that. So make sure your money is in the bank for 90 days prior to you buying anything. Have all your paperwork in order. Like, you need to make sure you have your W-2s, your 1099 for the last 2 years, your credit card statements, all these kind of things you're going to need, and make sure, and your car payments, make sure you know your bills. So when the mortgage broker pulls your information, you can verify that stuff, but also he's going to ask you for updated paycheck stubs, last 2 years bank notes, last 2 year bank statements. Have your paperwork ahead of time. It's going to make the system a lot easier to work for you. And speaking of mortgage brokers, get a reputable mortgage broker. Don't just go to your bank, your local credit union, because that's where you do business with now. They don't care about giving you a loan or not. They'll give it to you, but they give you at their rate. Go to a mortgage broker. A mortgage broker is going to shop 15 different banks and find the best rate for you. So always go to a mortgage broker, because they give you more options. They don't just, if you go to a bank, they're only allowed to offer you one rate, whether it's the lowest rate or the highest rate. They can only offer you that rate. They're not going to shop it out for you. That's what they give. So a mortgage broker will shop that rate out and find the best rate for you. So always use a reputable mortgage broker. How do you find one? Talk to the local agents in the area. They'll tell you who the guy who's doing the most deals are. Have an idea of your monthly bills, what you want. So number 5, have an idea of what you want your monthly mortgage payment to be, and that's going to determine what you can afford and what you feel comfortable paying. So let's say you want to be in that $2,000 area a month, because that's what rent is anyway. It's going to be $2,000. That's going to determine how much you qualify for, and then how much you need to put down to get there. So let's say you want to buy a house for $400,000, and at 2%, the mortgage is going to be $2,000. You're there. But if you want a home for $600,000, and at 2%, the mortgage is going to be $3,000, we need to put down a bigger deposit to get that mortgage to the point where you want it at. So just have an idea of what you feel comfortable paying every single month, and tell your mortgage broker, like, this is where I want to be. What's my buying power for that monthly rate? Number 6, try to buy down as much debt as possible. So if you have outstanding debt, like credit card debt, old car payments, old gas bills, old phone bills, try to clean those up prior to going to the mortgage broker, because it's going to get you a better rate. If you have less debt to income ratio, it's going to be better for you. So try to pay down some. If you know you're going to buy a house in the next year or so, start paying down some old school loans, debt, because the more you can pay down, the better your rate you're going to get, the better your credibility is going to be. Look for the best interest rate. Number 7, try to find the best interest rate. Again, paying on this debt, getting a good broker, job history, these all tie together with that one thing. Try to get the best rate that's out there, right? So right now they're hovering around 2.25, 2.5, which is unbelievable. It's never even heard of. And that's because the market's so good. But 2 years from now, they could be back to 5. Who knows? So get the best rate that's available for you and shop it around. Like you said, shop around the best rate. That's why you use a mortgage broker, and he'll tell you what they are. If you're going to buy a house, use a buyer's agent. It doesn't cost you anything to use a buyer's agent 90% of the time. So find a buyer's agent. These are people who know the business. Their job is to find you a home. They're not here to sell a home for the seller. They're not the listing broker. They're here to find you a home. So these guys can negotiate for you on your behalf. Try to get the best deal. Try to throw in a couple different bonuses for you at the end so that it works out in your benefits. So don't think you can go into a loan and you're going to Donald Trump it and negotiate the State of the Union, the best deal for you. It's not going to happen. So you need to go to people who do this all the time. And again, 9% of the time, it doesn't cost you anything to use the mortgage broker. The seller pays for that, so why not? Don't be afraid. Number 9. Don't be afraid to go over the asking price. So many buyers I have are like, I don't know. Look, in a hot market, you're going to have to go over asking if it's a hot property because there's 10 bids behind you that are going over asking anyways. So don't be afraid to throw in what they call an escalation clause, right? So that's a clause that'll allow you to not bid your highest amount, but counter anyone else that's out there, right? So let's say there's a home on the market for $500,000, and you put an escalation clause that says buyer will go $1,000 over any other bona fide offer up to $520. What does that mean? Well, it doesn't mean you're bidding $520. It says you'll go up to $520 if there's any other offers that are there, and it's an automatic counter to those offers. So if 10 offers come in and the highest one's at $519, you still win without having to lift up the phone once. So those escalation clauses and going over asking is what help people get the homes they want. See if you can get closing costs. Now, in a hot market, it's a little more challenging to do that. But if you can get closing costs built in, that's less money you have to bring to closing, right? Whenever you buy a house, figure your closing costs are going to be 1.5% roughly to 2% of the purchase price. So a home that's $5,000, you're going to be looking at about what, $2,000, 2.5, $2,000, 2.5, somewhere in there for your closing costs. So I don't think I got that right. No, if it's $500,000, you're going to be looking at about $5,000 to $7,500. Sorry, it's $5,000 to $7,500 for closing costs. So if you can get the seller to pay some of that or all of it, it's a way better deal for you. You definitely try to get closing costs if you can. But again, you have to ask your buyer's agent, is it with this deal that we're trying to put together, can I throw in closing costs, or do you think the seller is not going to want that? If he says seller's not going to go for that because there's 8 bids going over asking and they don't know if the house is going to appraise at that point, they're not going to include it in. But if there's some room to negotiate in there, throw it in 100%. This is a bonus one. You might have to get your hands dirty. If you're using a certain kind of loan, so say an FHA loan or VA loan, and they want the house, the outside of the house is chipping paint, and the seller's like, I'm not going to fix that for you. Don't be afraid to go there before the appraisal comes there and fix it yourself. Buy a can of paint, get a ladder, scrape it a little bit, paint the chipping paint where it is, and now your home is going to qualify for the loan you want. So don't be afraid that you might have to get your hands dirty to help to make the deal go together. I know it seems counterintuitive. Why would you want to help a seller sell the house to you and you got to do some of the work? This is a hot market. Buyers going to step up their game a little bit here and beat up 10 other offers. That might be a way around that. So just be aware that as a possibility. Again, I hope these tips help you guys. This is for me. I'm an active agent. I've been doing this for 20 years. I'm out there every single day with buyers and sellers. So I know sort of the tips and tricks to try to get offers accepted. Any questions, feel free to give me a call, 508-326-5320. Don't forget to hit the subscribe button and leave a comment down below. If you have something, if there's questions unanswered that's on here that I haven't answered you, let me know. I'll answer it.